Do you want to organize your finances, create wealth, and transform your wealth into a legacy? It's time to start today.
Welcome to Octane. My name's Andrew Wall. I'm the managing partner of CPA for IT.
And I'm Rachel Stedman, head of customer care.
Our new podcast designed to give your small business the fuel it needs to succeed. Hello and welcome back to another episode of Octane. I'm back with my lovely co-host Rachel Stedman. And
Hello,
this week, we're going to talk to you guys about tax deadlines. So Rachel, where do you want to start when it comes to deadlines? There's corporate tax, there's Gst Hst, there's source deductions, there's personal taxes. Where do we begin when it comes to knowing when our taxes are due? And what we need to focus on first?
Well, I mean, on the personal side is pretty basic, right? Everybody, we have a January to December tax filing period, and we are obligated to submit our tax returns to CRA come April 30th, the day that I think everybody knows and everybody dreads.
Yeah.
For a corporation, however, it's a little bit different in terms of from the corporate tax filing deadline.
And for sole props, it's also a little bit different too, right? For sole proprietors, you've got a June 15th deadline, but you still got to pay by April 30th. You get that extension on filing, but you still got to pay.
That is true. Yeah. So for the sole proprietorship, yeah. So personally, it's April 30th for payments as well as submitting. Whereas for sole proprietor, when you're self-employed, you still have to pay by April 30th, but CRA wants you to, or they're allowing you to do the filing by June 15th. So that's pretty much standard from an individual standpoint. From a corporation, one of the first things, I like to tell clients, in order to be able to determine what is your filing deadline, when do you pay, when do you make the submissions to CRA, it's actually all based on what is the year-end date of your corporation.
And can we rewind for 1 second and maybe just start with an explanation of the difference between a sole proprietorship and a corporation? I know to you and I, it's really intuitive. We know the difference, but to some people, that terminology that we throw around so easily might be overwhelming in itself. So maybe we can start with an explanation between the difference between the two.
Definitely. So a sole proprietorship is an individual that is working as a self-employed individual that does not have a separate entity, but their tax filings to declare their self-employed income and expenses are done in combination with their personal tax returns. So actually, sometimes I've had, sole proprietors say to me, well, I just want you to help me file my sole proprietorship tax return, but I'll take care of my personal. They say it doesn't work that way. They're done together, right? You can't do one without the other, right? And I mean, sole proprietorships, there are certain benefits of setting that up, typically catered for, again, a much smaller business type. So that's quite different from a corporation, which is a separate entity all by itself. Okay. Now we can go down a deep dive and hole of when is it better to be a sole
which we won't, but we will point you to our calculator, which will help you figure that out.
Definitely. We always look at it from a tax perspective when you're looking at determining one over the other, when you're looking to set up a business, cost versus benefits. So again, yes, another deep dive we will do.
But for that calculator, go to our website, search sole prop versus incorporation. And we do have a calculator that will show you, hey, what is the financial benefit of incorporating versus a sole proprietorship? Because there are some differences, some small differences in what you can deduct, but the large differences is, as Rachel pointed out so eloquently, it's a separate entity. And that separate entity comes with the ability to leave money in that entity and have it taxed at a more efficient tax rate than your personal tax return, which is subject to your marginal tax rate. But again, we won't deep dive on that. I know we've got only a short period of time. So Rachel, why don't we come back to these corporate tax return deadlines?
Yes. So once an individual sets up a separate corporation, okay, then there becomes the big thing of when do I select a year-end date for the business? Now, CRA says that you're allowed to have a year-end date within a 53-week time frame, and typically you want to have your year-end date being at a month end. Okay. Now, I know a lot of people automatically think of defaulting to December 31st, which is not necessarily the case, right? So you have that option. So if you incorporated sometime in, let's say, August, you could actually have a July 31st year-end date for the next tax year. So yes, so that's where we really start. What is your year-end date? And then from there, that's when we can map out, okay, what are you looking at in terms of your corporate deadlines? Okay, so just like on the personal side, for the April 30th, there's the payments, and then there's the filing, which are done together for an individual and separate for a sole proprietor. It is also separate for a corporation.
You gotta
So
love
CRA,
CRA. They expect you to pay before they expect you to know what you actually
they
have to
want the money.
pay.
CRA saying, show me the money. So yes, so you have to make your payments to CRA 3 months after your year-end date. So that's that 3-month grace period where you need to get your stuff together and make that payment to CRA. But then they're saying, okay, 3 months to pay, but we'll give you the 6 months deadline to actually make the submission. Now, it's like you said, Andrew, a lot of clients are saying, well, how would I know what I'm going to owe if my filing is, several months after, my due date to make the payment? Right. So typically we tell clients, look, from the first month after your year-end date, you want to start gathering up your information. By month 2, you want to be submitting that over to your accountant so that by month 3, it gives us enough time to make that payment or give you the deadlines. My apologies. I'll give you the details of what payments to make. And as well, if we're all lucky, have everything completed and then submitted within a 3-month time frame. We normally give our clients that 3-month, just throw out that information, 3 months, keep that in your mind, because sometimes all those small businesses, there are difference between the payments and the filing. If you do pay late, CRA is going to charge you interest. Okay, so that's the important thing. And I always like to tell clients, don't donate money to the government unnecessarily. That's what I call it, a donation.
Don't donate.
Right?
I love that.
So
and I think
don't
the other thing to
donate.
know and understand when it comes to those donations that, so yes, interest accrues from 3 months after your year end if you're a small business. If you are a holding company, it's 2 months, or if you're a non-CCPC, a non-Canadian controlled private corporation, it is 2 months. But for most of our clients, it's going to be that 3-month deadline. And 6 months after your year end, which is the filing deadline, is when penalties begin to accrue. Now, what is interesting about both interest and penalties is they're both a percentage of the amount you owe the government. So if you owe the government 0, even if you are late in that filing, any percentage of 0 is still 0. Now,
correct.
the one thing we still encourage everyone to make sure that they file on time, because if there's ever a reassessment and you were late in filing, there's now going to be a late penalty on that reassessment. So we always want to file on time. And in fact, ideally, we want to file by that 3-month deadline, as Rachel says. And I think one last point is that after you file your very first year, the CRA is going to want installments in most situations. If you don't owe any corporate taxes, then there's not going to be installments. But generally speaking, with pretty much all taxes that you owe the government, once you owe them more than $3,000, they typically want you to pay them either monthly or quarterly, depending upon the amount and the type of tax we're talking about. So that'll all be provided by your accountant. It's all dictated to us by CRA. A couple of exceptions to note is that if you're told to pay an installment, which is calculated typically based on the last 2 years of income, and your income is going down, you're free to not make those installments, with the caveat that if you don't make them and you do end up owing because your calculation was wrong for whatever reason, they will charge you interest, not from that 3-month deadline, but from that installment date deadline. Now, if you don't pay them and you truly don't owe, again, there is no consequence for doing that, but that is a risk you are ultimately taking on your own, because CRA is going to provide us, and we will provide you with an installment schedule based on the activity of your individual business.
Indeed, indeed. With a lot of clients now, sometimes I know clients get a little behind. Life happens, and they're unable to provide the information to the accountant in time for us to really give you, your amounts owing by that 3-month time frame. So, what I typically tell clients is at least come see your accountant. Let's give you an estimate. Okay, we'll give you at least an estimate. If you pay a little bit more than you actually owe by the time we do the filing, you'll get the
You'll
money
get it
back.
back. Yeah.
Paid a little bit less, then guess what? There'll be less interest that will be applied. So it's always good to at least, rather than just keeping that money sitting in your bank account, pay CRA, because that's
Yeah.
what's really important. That's what they want, your obligation to pay your income taxes, right? Another thing that's very important, actually, Andrew, since you were making reference to penalties, is this aggravated penalty that CRA typically
Yes.
applies if you are 3 years, consecutive years filing late. That is very important. Now, sometimes I know I've had clients say, oh, well, I haven't owed anything, or I've made installments, or different things along the lines of that. But you are still obligated to file by your deadline. And
Yep.
if you don't, even if there's no money owing, right? If you don't, and there's 3 consecutive years, they can give you this arbitrary penalty, and it can be stiff,
Yep.
right? It can be stiff.
And keep in mind also, if they ever do a reassessment on you and you've got this aggravated penalty, the penalties are that much worse, right?
It is.
Yeah. So I say always file on time whenever and wherever possible. And get those estimates in, get those payments in, but do your best to file on time, which is again comes back to keeping your information organized and preparing your bookkeeping on a regular basis, which we've got all sorts of content and webinars and sessions on, but we won't dive into that today. Why don't we jump over to Gst Hst,
Yes.
which is another important tax deadline that we have. Hopefully, for most people, this is a little bit cleaner than the corporate tax because we've only got really the one deadline here, which is well, again, yes. Are you? That assumes that you're on an annual method. Well, there's
not
always
just
this
that
well,
as
right?
well.
Yeah.
So what happens, and all too frequently, I see it with a lot of newly incorporated businesses when they set up on their own, maybe not sure what's what, that many times their Gst Hst year-end does not sync with the
Yes.
corporate year-end, which
Yep.
really poses a bit of an issue. So, sometimes the clients will have, their year-end date is July 31st, but meanwhile their Gst Hst is defaulted to the December 31st. So it is really important that you do sync that. Okay.
Yeah.
If your first year it's not synced, that's okay, because we can eventually have the Gst Hst match with your corporate year-end date, but that's very important. Another thing as well, typically you tend to find that happens is, unlike the corporate year-end date, you actually don't select that until you do your first filing to CRA. Whereas of the Gst Hst, when you open the account, CRA wants to know right off the bat, what is that year-end date? Okay. And many times when individuals set up their own Gst Hst account on their own, they call CRA, give them the information. Now, I always tell clients, CRA will typically favor a setup and a structure that is beneficial for them, not necessarily in your best interests.
Right. So they're going to put you on long method and they're going to put you on quarterly.
Oh, always. I see it too many times where clients are saying, okay, well, I'm on a quarterly filing, where you're only actually obligated to have a quarterly filing, I think, if you're making over $3 million a year. So, it's definitely not mandatory. So when it comes to a quarterly versus a yearly filing, it's a matter of what is in your best interest, right?
Yeah.
Why do the same thing 4 times in a year when you can do it once in a year? And not to mention that if you're late in filing and paying 4 times in a year, that's 4 sets of late payments and interest, right?
Yeah. And one of the other things too is to keep in mind that the deadline changes if you're annual versus quarterly versus monthly. So if you're monthly or quarterly, the deadline is 1 month after the period. If you are annual, it's 3 months, which then again ties back into that corporate tax deadline. And the goal is to keep this all aligned so we're not having to do work twice or to touch the file multiple times, because that's just going to mean more work for you, more work for your accounting team, and typically more costs associated with doing that.
Definitely.
Yeah.
Now, with the annual filing as well, Andrew, again, going back to the 2 things you have to do for all filings, or I should say all tax accounts: pay and file. right? So remember when we were talking about the corporate, they want you to pay in 3 months, but file in 6 months. Whereas for GST, HST, they want you to pay and file within that 3-month time frame. So again, why we really just always instill in our clients that 3-month deadline, because then sometimes clients get a little confused and they think, oh, I thought my GST, HST was also due 6 months after, which is not the case.
Right.
So that's definitely something important that clients remember, that the filing and the payment for the GST and the GST, HST and the corporate are not the same.
Right.
Right.
And those are
Go
the
ahead.
those are the two easy ones. What about
Easy one.
payroll tax? Now, yeah, exactly.
How much time do we have left? So
We
yeah,
may need
that
our own session dedicated to payroll tax, which we do have. Again, on our website, under our webinar session, we have entire sessions dedicated to understanding payroll tax, or source deductions as they're often referred to. But let's just give them the low-hanging fruit here. What are they for the average person? What are the deadlines for source deductions? And what do they need to be aware of? Or maybe not even what are the average, what are the worst case scenario deadlines, which is usually what we tell
so
clients to pay based off of.
okay. So I'll tell you, I'll go. It's funny because we started off with talking about the corporate tax, then the GST, HST, then the payroll. But the
Right.
funny thing is, whenever we're looking at penalties and fines, we
Well, yeah.
started with the easy ones and we've gradually went up to, in terms of when you have to make payments, which ones that CRA ding the most. It's
Hmm.
actually your payroll. Okay.
Yep.
You will get nasty fines for
10% if you're a minute late, 10%. And that's not counting the aggravated penalties.
Yeah. Yep. So payroll is the worst, okay, in terms of the penalties, then GST, then the corporate tax.
Yep.
Now, I mean, the rule of thumb is, when an individual is taking out money from the corporation for their personal use, that money can either be deemed, whether it's employment income or dividend income, which again, down a rabbit hole. Down a rabbit hole. But when we've determined that this money that you've taken out from the corporation is actually going to be declared as income, personal income to you, okay, there are the source deductions, which are the calculation of the CPP and the income taxes. So of course, very important, we know, that self-employed individuals, you don't contribute into EI, you don't receive any EI. It's like I tell my clients, you're your own boss, you can't fire yourself and go on EI. Right, so you don't get make that contribution or receive. So when we calculate the CPP as well as the income taxes, there are different ways you can make that payment. Now, some clients want to be on a monthly payroll, some individuals want to be on a quarterly, or for a lot of individuals, in terms of the whole firm, do it on an annual basis. Right. So whatever money you've taken off throughout the year, we've declared it as director's advances, and then we declare that as income. So
Based on a bonus.
that is correct, yes. So when we're looking at the deadlines for that, now typically the deadline is January 3rd, Andrew. It's for over 100
Well, so I mean, we can get into the average monthly withholding amount limits, and there are different thresholds. There's regular remitter, threshold 1, threshold 2. So it could either be the 3rd, the 10th, or the 15th. We basically keep it simple. It's the 3rd of the month following which you've made your payroll remittance. And it gets even more complicated if your payroll was made in the first half of the month or the second half of the month. Let's just keep it real simple. It's the 3rd of the month in which you made your payroll remittance, assuming that you make a payroll, or you're doing your payroll run December 31st, which is the last day of the calendar year. Your deadline would be January 3rd. It could also be like if your payroll run was November, it would be December 3rd. If it was July, it would be August 3rd. And so what we have is, inside of a corporation, we have the ability to do this bonus that we talk about, this magical term. And that bonus can be declared any day during the calendar year, plus up to 181 days beyond the calendar year, which actually typically puts us 6 months beyond the fiscal year. So for most people, you're basically looking at 2 dates if you're paying yourself as an annual bonus. And what I would say is, again, don't do this unless you've had a discussion with your accountant, because it has to be documented, it has to be interest calculated, it has to be handled properly in order for CRA to accept the bonus payment. Otherwise, the risk is they're going to say, no, this is monthly payroll. You owed me payroll from January 1. You can't, you can't wait until a year later to pay me. But if structured correctly, You have the ability to defer when you pay your payroll tax, plus make sure that you know exactly how much money you've taken out so you can keep your payroll tax as little as possible, because the marginal personal tax rate is much higher than the corporate tax rate. Even the lowest tax bracket is higher than the corporate tax rate, which is only here in Ontario, 12.2% versus lowest tax bracket after the basic exemption is 20%. So you're always paying, almost always paying more to take money out of the corporation than you are to leave it in. But of course, the limiting factor is what do you actually take out? And what you actually took out, we, for the most part, have to declare as salary. So if we can wait till the end of the year to know exactly what you've taken out, we can do our best to keep that salary as low as we legally can, okay, which is going to minimize your taxes. But assuming that we've done that, we have two dates that we can actually do. Either December 31st, if we want to keep it in the calendar year. Like, for example, let's say I wanted to have salary in 2020, but I had a July 31st year end. I could either declare salary December 31st, which would then be in the 2021 year, or I could do it 181 days, which would actually put it towards the end of January. So I might have a date that's due on both January 3rd and February 3rd if I'd chosen to do some income splitting between those 2 years. So typically the dates you're looking at are January 3rd or the 3rd of the 7th month after your fiscal year end. And this is keeping it simple.
This is complicated.
It's complicated, but this is like, it's in its most simplistic terms, because again, we have to look at, you know, what's your average monthly withholding limit? You could actually have a little bit more time than the 3rd. You could have to the 10th. You could have to the 15th. You might even be due a little bit sooner if the payroll was coming before the 15th of the month, which very, very few of our clients do. But again, if you have more questions about this, come to our website, check out our regular sessions. So cpa4it.ca/events, and check out our payroll force deduction webinar, where we spend literally an hour talking about what the difference is between these two and what the deadlines are, so that you understand this more thoroughly. But the purpose of today's session is intended to keep it relatively light and make sure that you're aware of the core deadlines that you have to focus on. And I think we've hit on those.
We actually missed out one, Andrew. So with the payroll, the source deductions, right, that's associated with the payroll tax. The source deduction is when you make payment, but we haven't actually discussed on the filing side. So that's where your T-slips come into play.
Yes, you're right. You're right.
February
I almost
28th
missed,
is
which is
almost
like,
missed that one.
yeah.
There's always the two of them, right?
And you think I wouldn't miss that one, considering we're actually recording this very close to that deadline.
I know.
Very,
So
very
yeah,
close.
so that's the important part as well. Once you've made the payment in terms of the payroll, again, same thing. Sarah is saying, okay, I want the payment in advance, but your deadline to make that information filing for the T-slips, whether it's a T4 or T5 slip, that is February 28th. So again, another one that's very important that you do submit, that you make that filing. There's also, again, a nasty penalty that they apply if you're so much as 1 day late. Right. So again, going back to, stop donating money to CRA. Even when we're looking at clients making payments, another thing that's very important is to factor in the deadlines, how much you owe, what's your limit from your financial institution to make those payments. Is the payment due on a Monday? Is it due on a Friday? So these are things that you really want to pay attention to, because if you are paying on the day of and your bank posts that transaction the next business day, guess what? That's considered late.
Yes.
Right.
And that happens all the time, right? All the time.
All too much. That is correct. Or even, let's say, for example, you have $20,000 to pay and your bank tells you your daily limit is $10,000 a day. Again, you have another issue. So it is very important that you know this information and try not to wait till the last minute to make that payment. Give yourself some time, a bit of a buffer, so that payment is processed. It's posted
and
to
confirm
CRA.
It's processed. Yeah.
Exactly.
Yeah.
Post it to CRA and get that done.
And one of the things that I also worth mentioning is, because a lot of people will think, okay, the best way is for me to go onto my CRA site and make my payment through the My CRA site, which you would think would be the best way, but it's actually not, because the My CRA site is effectively Interact, which has a much lower limit than if you go into your business bank account and make a payment through your business bank account. Usually most bank accounts, the major banks here in Canada, will have a tax payment and tax filing section of your business bank account. which will have a much greater amount or limit of what you can pay. And that's really important, particularly in payroll and GST, which are typically the larger amounts compared to the corporate tax in most situations. There is also new payment options with your credit card. Plastique, I think, is the carrier that will allow you to pay by your credit card.
Third party.
But for those of you, and Rachel knows I love my credit card points and talking about all the benefits of various MX cards. But unfortunately, I've crunched the numbers on this one, and paying by your credit card, the service charge that they charge through Plastique will cost you far more than the benefits of any point system, even if you've got the best point systems in the world. So don't think to pay by credit card is a way to earn more points. In this situation, it's maybe a deferral process if you don't have the cash flow. That might be better than a penalty, but don't do it just for the points.
That's true. That is true. And back in the day as well, Andrew, a lot of individuals, they would get the little stubs from CRA and they would take it over to the bank and make that payment.
Yeah. Do people still go to banks? Does that still happen? I guess so, right?
I go occasionally. Am I?
Are you one of those guilty parties who likes to go in person and talk to people?
I do.
And there are people who like to do that. And I guess the key here is you really need to have that voucher, right? Because if you don't have that voucher and you walk in, no matter how good friends you are with that teller.
That is true. There's nothing that can be done. That is true. And typically now with the vouchers, you actually have to request that voucher directly from CRA.
Yeah, we can't give it to you.
Mail it over to you. And I mean, that definitely takes time, right?
Yep.
So, I mean, online banking is definitely one of the best options for individuals. And again, it's just a matter of factoring what your deadline is, what your limit is, make the payments, stop donating money to CRA. That's exactly what I call it. There's no other way to call it, right?
Yeah.
But yeah, and as long as you're aware of your deadlines, you should be good. And what's important, I like to tell clients, is that you want to keep your business compliant. Do what you make your payments, file on time, right? Just be compliant at all times. And again, we do understand that things happen once in a while, maybe, but definitely try not to make that a habit for your business.
Yeah, because they'll give you those aggravated penalties. They will, I guarantee you. So I love that. Stop donating any money to the CRA. I know they've got lots of money from all the donations they've been giving back to support COVID, but it's not our job to give back donations freely and unnecessarily. So with that, I guess we'll probably wrap up this week's episode. We will be back again next week with more amazing content. Thank you, Rachel, so much. Great informative session. And once again, you kept me on track and made sure we didn't miss any key important things like this.
I'm always here to make sure.
Okay, thank you, Rachel. Bye for now.
Thank you. Have a good one, guys.